Welcome to the Value Investor TV podcast. This is the podcast that helps you grow wealth and become financially independent. My name is Becco and my partner, Hari.
Hello.
Okay. Let's continue our discussion, Hari, of this company, Resideo.
Yeah, and let me do a quick disclaimer here. Our podcast, the Value Investor TV podcast, is here to help you understand value investing and educate and entertain you in that endeavor. We are not a financial advisor, and we're not giving specific financial advice. If you need help with your finances, I would consult a financial advisor before making any investment decisions.
Awesome.
So, Becca, we were talking about Resideo Technologies, which is a spinoff of Honeywell, and we had kind of gone through some of the discussion around, why did Honeywell spin off this company? They've been doing this with 3 or 4 businesses since 2016, and they've been kind of following a blueprint of loading up the spinoff with debt and taking a cash payment for upfront, as part of that spinoff. So it's kind of an interesting setup, right? They're splitting off this business that is making it more available to Wall Street to identify it independently of this larger conglomerate, which is Honeywell. And so as we're going through this, we're kind of seeing like they're splitting off the business. There's enough difference between Honeywell and Resideo that you would want them to be separated. So now the real question is, what is the trigger that I think will or split, as they're split, what will allow Wall Street to value this better, right? And so we had talked a little bit about those things. And if you're interested in that, if you have questions about how spinoffs in general work, episode 63 and 64, we kind of walk through that. So, all right. So getting back to our checklist for spinoffs, does Resideo's spinoff of Honeywell, Honeywell spinoff of Resideo, does it solve some sort of regulatory or antitrust problem that allows Resideo to, make future acquisitions, so that, they can continue to grow?
Yeah. With antitrust, I don't think there is much issue. I don't think there was any sort of that issue with Honeywell having Resideo in-house.
Now, they have been making acquisitions since the spinoff. Resideo has. But I don't think anything that they couldn't have done if they were still part of Honeywell. So
yeah, exactly.
Okay, and the answer to some of these is not going to be applicable or not that important. But okay, so now let's start getting into some valuation questions. So are there any reasons unrelated to the value of the underlying business why the spinoff will fall in price, making it cheap? So for everyone who isn't aware, when the spinoff actually occurred, Resideo was trading at around $31 a share. It has dropped to around $21 a share at the time of this recording. So it's almost lost a third of its value since October 2018. And this was recorded in the middle of June 2019. So 6 months, we've seen a lot of selling pressure. So is there anything here that makes us think that Wall Street doesn't understand the business or what business Resideo is in? This is one of the questions that we have as part of the spinoff.
I think it's more of a. I think Wall Street definitely understands this business. It's not a really hard business to understand, in my opinion. But what the reason for such a huge downward pressure and reason for kind of Wall Street not evaluating it properly, perhaps, is because it is not in a sexy industry. To be frank, I think that's a big reason why there's a huge drop in sales price, in share price. I think that's one of the big reasons. Another big reason is what we kind of alluded to earlier in the previous episode, which is Resideo is no longer part of Honeywell, and Honeywell, as big as it is in many different indexes, and Resideo is no longer part of Honeywell, so it is no longer part of these indexes, and therefore there's a huge selling pressure.
So I think
those are
definitely the removal from the index is a big deal, right? And I think Honeywell, like most large companies like that, will have 70-80% of it will be held by institutions, right? And so the institutional investors would be dumping shares even if they don't have to be part of an index, just because the new company is too small, right, for them to loading them up. So they would get this, show up one day, Resideo is in their brokerage account, and they dump it because it doesn't meet their investment thesis, or they only invest in large cap companies, and this will fall under a mid to small cap business. So that can definitely do it. And is Honeywell and Resideo, are they completely different businesses in different industries?
Yeah, I think that was one of the reasons why Honeywell wanted to separate these businesses out. Maybe it'd be good to kind of reiterate what Honeywell said. It said product, which is one of the segments of Resideo, product is one of the few businesses within Honeywell focused on individual consumer market and primarily serves the residential market. And distribution, Resideo's second business segment. Distribution is the only business in Honeywell entirely focused on distribution.
Yeah, so there may be some institutional mutual funds that can't own Resideo because they are, their institutional fund is only around conglomerates or large industrial companies, and so that they don't fit that criteria. So that could be part of the selling pressure here too, right?
Yeah, exactly. Their charter doesn't just simply allow them to own these things.
Yeah, and we've seen that, right? We've lost a third of our value, or it's lost a third of its value since the spinoff. So, okay, so now let's move on to insiders. Tell us a little bit about who are the insiders of the new spinoff, and what are their potential motivations for, joining the spinoff, or staying with the company after the spinoff.
Yeah, so this company, Resideo, the president and the CEO his name is Mike Nefkens, and the chairman is Roger Fradin. So Mike Nefkin and Roger Fradin. So Mike, the CEO, he's been the CEO of Honeywell's home business since 2018. So he's not new, but he is certainly not, he hasn't been with Honeywell for a long time. So he came on board since the spinoff. He came to the board since the spinoff, and prior to this, he was with HP, Hewlett Packard Enterprise Company, from November 2015 to April 2017. So this guy is not originally from Honeywell. So that is a sign that we have to take into account. If you look at some other companies that we've analyzed before, there were some companies where the CEO of the parent company jumps ship to the child company, to the spinoff company. So that has a totally different connotation than what we're seeing at Resideo, where it's sort of the outsider. They're bringing in an outsider to run this company.
So what incentives are tied to the spinoff, and and how is their compensation structure, incentives that we would be interested in?
Yeah. So if I look at their incentive structure, they are looking at a couple things. They're looking at net income. They're also looking at free cash flow. They're looking at net income and free cash flow. Those are the big measurement stick that the board is using to measure the performance of the management. So from us, from a value investor perspective, those are really good.
Yeah.
Net income and free cash flow. Those are a fantastic measurement stick. I would also, in an ideal situation, I would like to have a little bit of kind of operational efficiency ratio in there, just because of the debt volume. I think that would have been nice, but I think these are good metrics to begin with.
Yeah, but it makes you wonder, why would the CEO take a job at Honeywell Home? He certainly would know that they're spinning it off if it was, if he was hired in the same year that they actually did the spinoff. And if he's saying tying it to net income is how he wants his, and free cash flow, which is, like you said, fantastic way of measuring things. If that's the case, then he's clearly knows that he can expand the net income and free cash flow. Otherwise, why come over to the business, right? That to me is kind of a very strong sign that there is something that they see, the management sees, so that they can maximize their own return, right?
Yeah, for sure.
So did the company stock in the new business? How much of that was given to management and employees?
I don't have that information with me, but I do have this. In 2018, the CEO, Mike, the president and chief executive, in 2018, his base salary was, let me blow this up so I can see it better. His base salary was $135,000. So very, very minimal. Again, but also this is 2018. So this company spun off in October. So it might be just prorated salary. But his stock award was $4 million. $4 million in stock. So total compensation for the CEO in 2018 came out to be $5.4 million in 2018.
Not bad for, a CEO of a fairly big company, $2.5 billion company. So,
yeah. I think so. Yeah. So certainly going back to your question about incentive alignment, I think certainly there are things in place to make sure that the management is aligned with the shareholders. If you look at the stock option, if you look at the stock awards, and the base pay,
is there any? Is Honeywell retaining any of the stock in Resideo?
Yeah, that's something that I have not been able to figure out. I imagine so, but again, I'm not sure.
Okay.
What are your thoughts on this?
Well, I think obviously the more that they hold, the more the incentive they see that by spinning it off, they'll get more value out of it. So it's just another indicator that you would look for to see, does this thing have legs, right? And I feel like what we're seeing is something is going to be coming down the line from a earnings perspective to expand that net income from what it is today, because that's what the CEO wants. That's how they've been incentivizing him to expand, to grow earnings. So I think that's why you saw, Q1, they've announced this $50 million reduction, right? Because most companies actually focus on operating income. They are focusing on net income, which tells you that they want this guy to pay down the debt also, right? Because if he pays down debt, there's less interest. Less interest expenses mean higher net income, right? So, but it's an interesting thing that he's focusing on that, and I think it's a strong sign. Okay, let's moving on to the how does when we look at Resideo, are there any other companies that are similar to it, and which can we compare multiples for those businesses?
Yeah, I think this is a great question, and this is something that I think, haven't done a good job with our analysis. Comparing the multiple to kind of wider industry, and this is going back to what we talked about with the technology industry. They're getting huge multiples. What does that look like in the context? In that context, what does a company that we're analyzing look like? I don't think we have done a good job in that. I think we should do a better job in understanding the industry and the multiples that the Wall Street gives. As much as I like to ignore that, because we really should analyze individual companies one by one. It is the world that we live in, and Wall Street sort of dictates the price in many cases. So going back to your question, I don't have the answer for that question.
Well, I think the thing that we can kind of just anchor to is a business like this, you'd expect a PE of 10 to 15 is, wouldn't be unheard of, right? And today we're sitting at a PE of 6. So I think even without really knowing exactly, doing a direct comparison, they're cheap, right? I mean, they're trading lower. I don't imagine that the rest of the industry will be trading at a PE of 6 also. So I feel comfortable with saying, it is lower than their peers. I don't know that they necessarily have direct peers, that you can point to, but okay. Last couple of questions here. Are there any future events that we see in in Resideo that would make us think there could be an inflection? So this could be new products that are coming out, a potentially large contract, with a distributor, or from the distribution side, anything like that you've seen or that they've alluded to.
Not that I am aware of. I think certainly as we look at spinoffs, we need to kind of think about the catalyst. What is going to be the inflection point, like you mentioned, Hari? But when it comes to Resideo, not that I can really think of. They did mention, their all their products work with existing big OEMs. So, for example, like Amazon or Samsung, all these different like vendors. Their products, Honeywell's product, or now Resideo products, they interoperate with these big vendors, but that's already in place. In terms of future catalyst, not that I can see.
Okay. I think part of this is not necessarily that, a PE of 6 by itself is its own catalyst in some ways, right? If a company is trading at such a cheap price relative to what we think it should be worth, right? If we do our normal analysis and we see them starting to clean things up and, they start getting, seeing operational improvements now that they're outside of the Honeywell arm, I think those things are going forward could be potentially, significant valuation drivers, right? Or price drivers. But I think, just getting back to our normal thought process on investing in general, right? The challenge that you face with any investment, whether it's a spinoff or it is a, it's a great business at a fair price, or anything else, is it's still opportunity cost, right? You own Resideo relative to other businesses that you could potentially own, right? And that's kind of where this, falls into a gray zone, right? Is that you see the PE of 6, you see their ability to grow. They have a strong incentive, structure to the CEO to kind of clean things up and move it. There was forced selling that kind of lowered the price beyond what was reasonable, right? So yeah, there's a lot of catalysts here that, it takes about 6 months to a year before they actually show up in the stock databases, so that, institutionals don't even know that they exist until, 6 months or a year out. So yeah, there's definitely things here that are interesting, right?
Yeah, for sure. Those are like inherent. I would agree with you, Hari. I think those are pretty inherent to the spinoffs, like these catalysts, embedded catalyst. They start rising up to analyst radar. They're in analyst radar like 6 months down the road. The PE multiple of 6 catches people's eyes. Whoa, why is this so cheap? So all of a sudden, people are like piling on, and that itself, like you said, could be a catalyst. Go ahead.
I will say this, that remember that the long-term returns of spinoffs from 1986 or something like that till 2015, was above 20%. That's indiscriminately owning all spinoffs. You got a plus 20+% rate of return yearly. So what we do when we look at any of these is we want to filter out the dogs and keep the gems, so to speak, because for everyone that went up 50% or 90%, there's others that get decline in value or so on. I don't see this business as something that'll decline in value over time, right? I mean, they have I wouldn't call it a moat, a strong moat, but they have some protection because of the Honeywell brand and that kind of stuff. So, I mean, I think they'll be able to at least maintain their revenue going forward, and I think it'll probably grow through acquisition and other operating efficiencies and that kind of stuff. And the management is certainly incentivized to do that, right? To maximize their net income. So, so yeah, I mean, what do you think? Do you think that's that's the way to think about this kind of business?
I agree. Yeah, I agree. I agree with that, and I think. More to come. I think, they spun off, October 2018. This is around the time, this is June. So, we're getting close to their 1 year mark. So at 1 year mark, we should, I think this is something that has to be on my radar to kind of continuously kind of look at to see how it kind of pans out from here. I think this will be a good case study, for me to see how it kind of rolls out from here. And see what management does to clean things up and to put themselves back on the radar. Yeah,
and I think they're probably working on that kind of stuff right now. That Honeywell had an incentive to get it spun out, but the fact that they essentially hired a CEO to come work for this, if he's capable of working at a $3 billion company, he's probably capable of working at another $3 billion company. So, but he came to Honeywell for a reason, and I think that can tell you a little bit about, why he's stuck with Resideo is, he wants to maximize that net income going forward. So, and the free cash flow.
Yep. Yep, exactly. A few more questions, sorry.
Well, I think, spinoffs is more of an advanced topic than what we've been teaching you so far. Certainly I have not to date invested in a spinoff within the first 2 or 3 years. I, like an idiot, I've looked at a lot of spinoffs and I said, wow, that was really cheap. And then I did something dumb and looked, elsewhere. And then the stock, doubled or tripled in the next 2 or 3 years. So, this is something that for both of us, I think, we're starting to, realize, that there's tremendous value to be had in the spinoff space. We're still just learning how to, to maximize that value. So, and identify the good stocks from the bad ones, right?
Yeah, exactly. Yeah, I definitely want to learn as much as I can about spinoff because all the experts are saying, this is a place to look for.
Yeah, and
I look for a really good return. So,
and I think they're right. I mean, I can definitely see why you would think Resideo is cheap and why it could grow. We looked at another one, CorePoint Lodging. That makes, they own all of the real estate assets for La Quinta hotels, and their kind of catalyst is that they had a lot of properties under construction, and they were upgrading them to go to a higher price tier, so that they can charge more for the same asset, essentially, right? So to me, that's that was kind of a more clear, catalyst for growth. But CorePoint has been on, has been spun off for almost or more than a year now.
More than a year, yeah.
And stock price is still languishing at a 50% or more drop. So, so anyway, I think there's just a lot of things to be learned here, and a lot of polishing that both of us need to do on the spinoff side.
Yeah, exactly. And if you guys have any thoughts about spinoffs, please reach out to us on Twitter, Value Investor TV. That's our handle, Value Investor TV, or reach out to us on email, info@valueinvestor.org, info@valueinvestor.org. All right. Anything else, Hari, before we close this one out?
No, if you're interested in asking us to look at another company, you can also send us an email at that same site, info@valueinvestor.org, and we'd be happy to look. This was certainly a great company for both of us to start reviewing, because spinoffs are always a great place to look. So,
yeah, exactly. Awesome. Thank you guys for listening, and hope you stick around and listen to more episodes in the future. Awesome. Thank you guys, and we'll see you on the next one.
Yeah, thanks.